Okay, hey there. How are you today? Thank you for being on the show. And Joe, I wanted to welcome you. What's going on with you, brother?
Not much, man. I got a haircut.
Oh,
Not
well,
all
you
the way
take the
off,
hat off.
but
Let's see the whole thing. Come on, let's see the full. Hey, that doesn't look like a haircut to me.
yeah, I mean, I got about a couple inches taken off, so I'm doing all right, man. Can't complain.
Well, Joe Salas is with who is it? It's Purple Paint Inspections
That's my
and
company,
Jane
yes,
Byrd International or Jane Byrd Properties International.
and that's the brokerage I
And
work
we
with.
are
Yes,
always glad that you're here with us.
I'm happy to
And
be here. How
so
you been?
this has been a good week. We're closing a handful of loans last week and this week, and the market definitely affecting the sales in September. God, I can't believe it's going to be September. Can you believe it? I mean, this year is
My wife and I
going
were already
away.
saying that it's already the end of August. Can you believe it?
The only good thing about that is I am not real keen on the sun, and the heat just sucks the life right out of me. And so I'm anxious for October to get here, where it might start getting a little bit cooler. That would
I
be a
hope
very
so.
positive thing for me and my
I hope
tennis
so.
game, by the way.
And your tennis game.
But anyway, let's get started with what I've got. That way we won't hold anybody up. But I think I've got some interesting information today. And let's see, that's not where I wanted to start it. Let's go back here. That's the Better Credit, Better Home with Joe Salas and Michael Durr. Was my call myself the Kingwood mortgage guy. And shoot, just if you wanted to find me, or you could find me, just look up Kingwood mortgage guy and you'll find me. So here's what we're going to cover today. We're going to do a little humor. Did a little different this time. I talked briefly, very briefly, about the zero down grants that we have for heroes, first time home buyers, public servants, military people, nurses, any school employee, vacation home rental companies. Now, this is one that's kind of near and dear to my heart. And I think that some people out there may be interested in what we've got to say on that. I'm going to show a real example of a credit score improvement in about 2 weeks. We can talk about it as much as we like to. Uh, then we're going to get into the real nitty gritty of what's going on in the news or the headlines out there. Home builder confidence sinking. Oh, poor guys. Forecast growing housing inventory dampens. Uh, I'll give you the 30-year mortgage rates today. U.S. added 528,000 jobs in July and what that could mean to us in the real estate business. Finally, new home starts falling. New home starts falling, so it goes back to the builder thing. And then I just want to let everybody know about a lock and shop program that could be a valid thing if you're out there watching interest rates go up and you're trying to buy a home. So that's kind of what's on the plate. Joe, anything on there interest you?
Yeah, a couple things, man. That vacation home rental companies thing, and then also I can add on a little story about the lock and shop. So
Good, good.
let's talk about
Okay,
that.
well, let's get to it. So this is a young boy enters a barber shop, and the barber whispers to his customer, "This is the dumbest kid in the world. Watch while I prove it to you." The barber puts a dollar bill in one hand and two quarters in the other, then calls the boy over and asks, "Which do you want, son?" The boy takes the quarters and leaves. Barber says, "What did I tell you?" said the barber. "That kid never learns." Later, when the customer leaves, he sees the same boy coming out of the ice cream parlor. "Hey, son, may I ask you a question? Why did you take the quarters instead of the dollar bill?" The boy licked his cone and replied, "Because the day I take the dollar, the game is over."
Sounds like my daughter.
Maybe, yeah, that kid's not so
She's 10
dumb.
years old. It sounds like what she does.
All right, well, I thought that was pretty funny. Barber. All right, so this little advertisement, if you will, is about first zero down, first time home buyer program, and who qualifies for it. This is for first time home buyers. If you're a first time home buyer, you qualify. If you're a school district employee, if you're a medical worker, if you're a police or fireman, if you're military, if you're public servants, and there's hardly anybody that doesn't qualify for this. Now, obviously, if you're not a first time home buyer, it does narrow down, but this is a real FHA loan, qualify with the FHA standards, the low FICO requirements that the FHA requires. And the grant, it's either two-pronged. It can get 3.5%, which is down payment needed on a first-time home buyer program. It's a grant. That's an important thing. You don't have to pay it back. And or you can get, if you have the 3.5%, then you can get a 2% grant. And obviously, when you take less money, the rates are going to be a little bit better. Now, I have to tell you in full disclosure here that when you need this kind of money, 3.5% is not a lot of money. Sometimes it's better to get it from family or to sell something or to save for a while and wait a little bit. But it's still an option for somebody, particularly if you've got an option on a great home that is going to go away. So, Joe, you had any? I think you've told me that you've had some experience with first-time home buyer programs.
Yeah, they serve a purpose. I think it's something that, if money and cash are tight, it's something to definitely consider if you're a first-time home buyer.
Yeah, it's an option, and I think both Joe and I believe that owning a home, and particularly if you have the income to own a home, you just may not have saved a lot of money, then it's definitely a win financially. I mean, that's going to be something that you're going to see is going to pay dividends to you year after year after year. And don't get me wrong, you have to buy the right house. You have to have good counsel on what house to buy, and you don't want to buy a home that's not going to appreciate. Because believe it or not all homes do appreciate. There are some homes out there, and if you get some wisdom from a professional, 9 times out of 10, you're going to go right.
Yeah, and as a note, Mike, I mean, I know you would go over this with any home buyer that wants to take advantage of the program, but it's not only 3.5% that you need cash to close. There are other closing costs associated with buying a home. So I think if anybody's interested in this program and want to kind of figure out what they need for closing on a home specific that they want to put a bid on, to get in contact with you, that would be the best course of action.
Yeah, I'm glad you mentioned that. Yeah, the 3.5% down payment is part of it, but you also have closing costs, you have tax and insurance escrows, and a lot of times you have to pay those up front. These are days, though. It used to be that I'd say 50% of the deals that we did, the seller contributed to the closing cost in some form or fashion. And that is definitely a way. And there are ways to get around it. You just have to understand all the options. And thank you for Joe for kind of leading me to that area. There are definitely ways that you can get around that. But it's just knowing what's going on out there. So anyway, good program. There's people out there that need this program, and we just wanted to make sure that you knew that we had it. All right. So this is one of the things that I think is fun. And you notice I've got parentheses around summer, and this is the latest entrant in vacation home market. And so what this group does, these are entities, and they help people buy a vacation home. Now, let me tell you, it's changed buying a second home as a vacation home, but there are a lot of people that are interested in this. And so there are a handful of companies, and I put some of them on here that were in this article. One of them is called Picasso. They're the #1 company right now. Another one is Ember. Third one is Divvy. The other one, the fourth one there is Here. And the next one is Avantstay, I guess. And each of these are based on vacation homeowning. The summer is one of the latest entries, and it seems like they've got a market that's a little different than some of these other guys. I'm not a master on what Picasso is, but I've read about it, and they are kind of aiming at a higher end vacation home where a group of people, it could be a family, it could be a group of investors, all come together and they buy $1 million, $2 million home, and then they rent it out. And you get a percentage of ownership and the profit. Of course, Picasso probably manages it, not only the renting of it out or the taking care of it and all that kind of stuff. And each of these would be interesting. Obviously, you can, if you have the money and the down payment and stuff, you can go buy one of these investment properties yourself. And I've done that, and it's not without its hiccups, but it's a good way to own real estate. And if anybody wanted to know more about the thing, the way that Sandy and I did it, I'd love to chat with you. But I did want to read a little bit about this article. There's the leader in co-ownership is Picasso. Ember is hot on their trail. A company called Here focuses on the public second home ownership with an investment pitch. And Avantstay leans towards the large group vacation home rental business and working with agents to find them. Now, you got to be a little careful about that last one, because it's like, what's the one that gets all the bad rap is the you buy a week's worth of a place. What is it? What do you call that?
Timeshare.
Timeshare, yeah. A timeshare is probably a cousin of this group. It says in here, with Summer, it buys the home on behalf of the clients to own individually, requiring a 10% deposit and monthly subscription fees. And I'm not going to go too much into the woods on this, but if anybody has interest in this type of thing, I'll tell you just a quick pitch for me. When you have a home like a rental property and somebody else is paying or helping you pay for the mortgage, it's a fantastic way to own real estate. And if it's a property that's on the water or at the beach or in the mountains or something like that, something that's usually very desirable by a lot of people, then it can be a great way to invest in real estate. And I can tell you that the Sandy and I went into investing in a lake property up at Lake Livingston, not knowing anything about it. And I mean, it's been pretty darn good. That's all I can say. It's a nice place. And anyway, it's a blessing, and I feel very fortunate to have it. What do you have on vacation homes? Have you done anything like that? Have you ever done an Airbnb or a VRBO?
Well, my wife and I are starting to get our toes wet in that. That's why I called you for the property loan.
Gotcha.
I ended up finding a credit union type bank that's going to loan me some money. But as far as this Picasso and all these other ones, it's similar to timeshare, but think about it as you actually own the property.
Right.
There's shares of ownership in the property, but you own the actual real property, and you can sell that ownership stake, etc. I did a little bit of research into Picasso, trying to see if I could be of service to them, finding them homes that they would like to purchase. They're not in the Houston area, but they are in Texas. They're in Austin area.
Gotcha.
Yeah.
So our family, Sandy's got a big family. She's got 3 sisters. All of them have a large family, a lot of kids, and the kids are grown-ups now. I mean, and we've talked many times about buying a home in the Colorado or Utah area where we could go ski and take advantage of the rental thing up there. And I haven't put it together yet. But like this could be an option. But
highly in the Snowmass area. It's next to Aspen. It's a beautiful area.
I bet. We skied Utah this last time I went skiing, and I'm about the end of my skiing career. But that'd be the perfect time for them to buy it, and I can stay at the house. Anyway, let's move on. All right, so I wanted to go over this credit thing, and I don't know. I'm going to make this a little bigger for me. So what I did is this is 2 different credit reports. And if you'll notice on there, one of them was done on the 15th of July. The other one was done August 1st. Now this is the same person. And I've blotted out their co-borrower and borrower's names there. But what I wanted to show is what a simple version of strategically paying bills or doing something like that could help you with. And an example is, if you look at this top one, the borrower and the co-borrower, they stayed the same. So this is the borrower on the top of both of them, the co-borrower on the top of both of them. And you'll see that he started in July with a 614, a 618, and a 631. Now, that makes the middle score 618. And you can get a mortgage with a 618 FICO score, but you're going to pay a little bit of a premium for the price. On the right, when we pulled his score on the 2 weeks later, for all intents and purposes. His middle score jumped up to 651. Now you notice the other thing, the potential score improvement was 31 points and 32 points and 23 points. Now we didn't get all of the points from Experian. Well, we did get all the points from Experian. We did get all the points from TransUnion. We left a few on the table on Equifax because we didn't need them. But to go from a 618 to a 651 middle score was huge. You notice down here on the co-borrower, we didn't do anything to their credit. And they actually did lose 3 points, but it didn't really negatively affect us in this particular case. But the reason I want to point that out is there are people out there that don't understand how credit works. And I want to tell you that, and there are a lot of people that go to credit restoration when they don't need to. And I'm a credit scoring expert. I mean, I know how this works. I know what to tell you to do. And in many cases, the credit reporting agency will tell you exactly what to do if you know where to look. So I just wanted to let people know that if you knew that you had some credit issues, then, and it's holding you back from purchasing a home or buying anything for that matter, there are ways to fix it. And I'd love for you to call me at that number right down there. That'd be a good one.
Let me ask, Mike, you had about 15, 16 days between the first credit run and the second credit run.
Right.
Sometimes, your credit card companies or the company that you have the line of credit with reports at a certain time in the month. Does your program that you work with force them to report, or do you wait for them to report? How does that happen?
Well, there's a thing called a rapid rescore. And the rapid rescore is something to expedite it. Now, the tricky part about it is you do not know when the creditors that are reporting stuff, when they report. They can report anytime they want to. The majority tend to report at the end of the month, which makes sense. And so a lot of times you have to wait to the end of the month to get that information. And sometimes it takes to the 4th or 5th of the month to get it. So in this particular case, we could have waited, but we had a loan to close and we had to get this guy's score up so we could lock in a rate or improve his rate. And so it's usually a timing thing that's a factor. And
is there a cost to the rapid rescore, or is that something that y'all?
Well, this is a painful point for me because there is a cost to it, but we cannot charge the borrower for this cost. All right. So it's free to the borrowers. And in some cases, if it's a big, I give an example what the cost is. For each line of credit, it's $35. And then you have to think about that times all 3 bureaus in many cases. So yeah. What is that, about $105 per line of credit?
At least, yeah.
And I know I paid over $800 for a rapid rescore on a guy that had a handful of things he needed to take care of. So, but you know what? We look past that and we just get deals done. And so if anybody is, maybe this hits a nerve or something like that, just call me. We can help you. A lot of times it takes a little longer than this. Some cases a little more of a project, but it's definitely something that can be done. And here's a perfect example of it. I thought that that'd be a good one to show. Okay, new home starts fall sharply. Housing sector in retreat. Now, what this one is this is kind of part of the headlines, but they say this is the sharpest decrease since January. Now, keep in mind, January rates were fantastic. February rates were fantastic. March rates were fantastic. April, that's when it started all turning around, or maybe it was the end of March. But the unsold inventory for builders is a big concern. Home builders are very cautious. They're putting their money out there. They paid for the lumber. They paid for the help. And until they sell that puppy, they don't have anything back. And they're scared. Well, according to this article, there's reason for them to be afraid. Now, so let me just read a few of the parts of this. For the first time since May 2020, the monthly NAHB/Wells Fargo Housing Index fell below the break-even measure of 50. Roughly 1 in 5, or 19%, home builders in the HMI survey reported reducing prices in the past month to increase sales or limit cancellations. That's right. People are canceling their contract on these homes. Meanwhile, 69% of builders reported higher mortgage interest rates as the reason behind falling housing demand. Uh, Builder confidence is sinking like a stone. Now, I don't mean to, I don't want to seem like I'm taking some glee with that, because the home builders are one of my nemesis, particularly the way they do their mortgage stuff. But this is what's going on. And what I think is the thing to draw on this is that the market that's been 100% seller market is shifting. And I don't know if it's a complete buyer's market now, but it's definitely trying to get there.
It's
Would you
on its
agree with
way.
that, Joe?
Yeah, it's on its way, and my email inbox can tell you the fact that home builders are getting concerned because everybody's offering discounts, everybody's offering BTSAs or extra commission. Um,
Yeah, it's not as
there's a,
easy.
you know, one of the things that I've said to other colleagues is whenever you get these home builders who have millions of dollars, who have offices set up, who have people working in their offices that all they do is the analytics behind where the market is going. Whenever you see these big home builders, in a sense, panicking and trying to get rid of inventory, you know the market is either shifted or heading that way.
Right.
And that's what we've been seeing for the last month or so is my inbox is full of these type of offers.
Yeah.
Which, by the way, if you're in the market for a new home, get in contact with me, and I'll help you figure out who has the best discounts and where the best opportunity is for you.
Well, it says that people are canceling contracts, and they are definitely making adjustments for home buyers that can qualify. The last line of these headlines was the multifamily building is staying on pace. So a home builder that's building single family homes, that's a riskier deal right now than it is if they're building apartments or condos or something to that effect. Those have not slowed down, and evidently rents, even though rents aren't going up like they were, which again is another positive, that they're still going up. And so I thought that was an interesting thing. Of course, if anybody wanted to get additional information, I've got a multi-page report here that was dated, I think it was yesterday. So love to go over that with you. Let's just see what else we got here. Today's mortgage rates. So again, this is where Joe started laughing at me last week. But mortgage rates based on today's 10-year Treasury and the mortgage-backed securities is going for about 5.29. And you notice it has this 0.004 increase. It's up just a little bit. That's not a big uptick. I guess it was 5.25 on Monday. This is today. It shows, you can't really see that, but it's 8.16 right there. And the bonds, from what I've seen, have been very resilient and resisting increasing. So there's pressure on bonds to kind of force them down, but they're staying strong. That indicates to me, and it should to you also, is that rates have pretty much stabilized in this area. Now, that's not to say that tomorrow there won't be some kind of wild thing that happens, which it does, but 5.25, 5.29. Again, if you call me and mention this show at all, you'll definitely get a discount off of that rate. I'm just telling you right there. All right. All right. Here's some interesting additional news is that the U.S. added 528,000 jobs in July. That was more than double what the forecast was for jobs. And how did they miss it that much? Not only was it double what they expected, but they adjusted or revised the numbers up for May and June. So so how is this, or how can it be a recession? When you have job numbers, the number of jobs available, it doesn't make any sense. I mean, these are counterintuitive. And so to me, it just shows that this is the craziest market I've ever seen. Joe, what do you got?
I just bought some crypto, and I've seen a 30% increase on my purchase price so far.
Interesting.
So I think it's all conjecture at this point. If we knew what was happening um, beforehand, I'm sure that these politicians would go out and buy stocks uh, in the appropriate markets. But I think you know relating it to the real estate industry, um, we are seeing a little bit of hesitation from buyers. We are seeing a little bit of capitulation from builders and sellers. Um, Prices have been lowering on some listings that I've had my eye on, and homes are sitting a little bit longer on the market. So, is it a recession? I don't think so. Not yet, at least. Is it a different market and a different atmosphere than it was, 6 months ago? Yeah, absolutely.
Yeah, I think the times when people really were stretching on their home prices or pricing their homes, that's come to an abrupt halt.
Yeah,
And I think that you can get homes now for a little bit less than what you would have maybe, gosh, what, 4 weeks ago? Maybe
and have
even less than that.
more of a choice.
Yeah,
That's the thing.
with more homes to bet. Now,
Yep.
the other part of this, it says the Fed will have to continue raising their short-term interest rates because it's not a recession, and if you have more jobs available, that's an indication that whatever they did may not have worked in this particular arena, and it has a tendency to, I mean, what their whole mission is to tamp down inflation. And that means that those shorter term interest rates are going to be raised up. And so I don't know what that's going to mean to mortgage rates. I mean, obviously, mortgage rates are different than the Fed rates, but I do think that there's a correlation between the two, and it could cause rates to go up. It's just one more thing that can happen like that. So it'll be interesting to see what happens with that.
Well, over the last month or so, Mike, you've seen the rates kind of plateau, right? They're not.
That's exactly right. Rates have plateaued, and it's good news because there were a time. Sorry, somebody's not going to get that phone. 6.25 was the highest rate that we saw on a conventional 30-year fixed,
Yeah.
and the good news, it's down about a point. I think that's a great
That's great news.
thing, and like to see them get back down to the fours. All right, lock and shop. Lock and shop is where somebody that would be worried that interest rates are going up would lock in a rate. And the way this is done is that it's basically the equivalent of getting pre-approved. You provide an application, you provide your documents, your W-2s, your paycheck stubs, tax returns, bank statements, all that kind of stuff. You get approved. It doesn't take a couple days to do that, and you are ready to lock and shop. And what that means is you've got usually a 60 to 90 day period to go and find a home and not worry about the interest rates. The twist that I play on this is there's no downside to this. So even though you might shop or lock 60 to 90 days in advance, if for some reason when you go out and find the home that you want to buy and the rate is higher than what you would get on a 30-day lock, then you switch. And I know the company that offers this product are going, what's he saying? That's sacrilege. Well, we take care of our customers, and that's the way we do it. But you had a comment on the lock and shop also. So tell me about it.
If you're in the market right now, I have a client that currently is in the market, do this program. It will help you greatly. And also it'll alleviate some of that uncertainty with the process. So as Mike said, it's fairly simple. It's just similar to the approval process for getting a loan, and it alleviates some of the concern that today's rate or the rate that you knew of today is going to be different, because Mike has locked in 60 days for my client on a rather competitive rate. Actually, I'm really surprised at that rate. So, so it's worth your time and it's worth your effort. Give Mike a call for sure.
Well, I appreciate that. Well, Joe, I think that is the end of my slide. Yeah, there we are. So any last parting words, anybody that's watching today?
As we go through, especially for buyers, because I've come across this recently. It still is not a buyer's market yet. So dealing with denial is still part of the process of finding a home. A good realtor with knowledge and experience can help protect you and can help make the process as easy as they can. And a good mortgage provider will definitely, like Mike, will help you through, choosing the right tools to facilitate your purchase. So just be patient and understand that, the right one is out there for you.
Well, I appreciate that, Joe, and I appreciate you coming on with us today. It's always good to have you on here to get your kind of perspective on it, not only from a realtor or somebody that's been doing out there in the fighting the fight, but also as an inspector. I mean, I think that gives you a lot more credibility than a lot of people, just because you know what makes a good house and what doesn't. So appreciate all those that watched. Gosh, I think we went a little bit long today, which I was a little long in the tooth today. But anyway, I appreciate you. Hopefully we'll see you next week, same time, same station. And then if you have any comments, I'd love for you to call either Joe or myself. Our numbers are right there. And we'll talk to you next Tuesday at 5 o'clock.
Thanks, Mike.
All right. Bye.
Bye.